Welcome to our channel, Auburn Chronicles. If you enjoyed rural stories, like and subscribe for more, and tell us in the comments what time it is and where you're watching from. And now, Adam will take us into today's story.
The morning Herman Dietrich walked into the First National Bank of Cass County in January of 1974. Nothing about him suggested he was about to confuse a room full of men who believed they understood money better than anyone else in Butler County. He wore the same faded Carhartt jacket he had worn for years, the elbows softened thin from use, the cuffs darkened by grease and dirt that never quite washed out. His boots left faint tracks of dried Nebraska mud across the polished floor as he crossed the lobby, nodding once to the secretary who already knew his name without looking it up. Outside, Bellwood sat quiet under a pale winter sky. A town of barely 400 people where everyone knew what everyone else drove, borrowed, owed, or dreamed about buying next. Inside the bank, the air smelled faintly of paper, coffee, and furniture polish, the smell of money staying where it was supposed to stay. Gerald Pritchard sat behind his oak desk, tie loosened just enough to signal approachability. A man who had moved down from Omaha 3 years earlier to help shepherd rural Nebraska into what everyone agreed was a new era of growth. Gerald had seen Herman before. Of course, everyone in town had. Herman farmed 640 acres just outside Bellwood, good ground. Platte River bottomland rolling into hills that could grow corn and soybeans as far as the eye could see if the weather cooperated and the inputs were paid for on time. Herman was 50 that winter, second generation on the land. A man who had watched his father nearly lose everything in the 1930s and had learned to carry that memory quietly, the way some men carry scars under their shirts. He sat down across from Gerald and slid a folded application across the desk, his hands steady, his pale blue eyes calm in a way that made younger men uneasy. Gerald glanced at the form, then back at Herman, then down again, and for a brief moment, something like amusement flickered across his face, quickly smoothed into professionalism. Herman was asking for $12,000. The purpose was written clearly in careful block letters. Purchase of used John Deere 4020 tractor. Gerald cleared his throat and leaned back slightly, tapping the paper once with his finger. Herman, he said, not unkindly, I'm looking at your accounts here, and unless I'm missing something, you've got more than enough cash to pay for that tractor outright. Why on earth would you want to pay interest if you don't have to? Herman didn't answer right away. He looked around the office instead, at the framed photos of ribbon cuttings and community events, at the calendar on the wall advertising a seed company, at the window where you could just see the grain elevator in the distance. When he spoke, his voice was quiet, almost conversational, the way a man talks when he's not trying to win an argument. Because my grandfather taught me that if you can't buy something twice, you can't afford it once. Gerald blinked. He waited for the rest of the sentence, the explanation that would turn it into something that fit inside the world he understood. It didn't come. Herman just sat there, hands folded, expression unchanged. Gerald chuckled softly, thinking it must be a joke or some old saying meant for a different time. But Herman wasn't smiling. He had heard that rule his entire life, long before interest rates, before leverage ratios, before agricultural lending reports and extension seminars told farmers how to think about growth. Otto Dietrich had come to Nebraska from Germany in 1891 with almost nothing, taken up a 160-acre homestead, and survived by being stubborn in ways that didn't look brave until much later. Otto had lived through droughts, through collapsing prices, through neighbors losing land one auction at a time. He had died in 1959, but his voice still followed Herman into rooms like this one, still sat with him when decisions had to be made. If you can't buy it twice, you can't afford it once. Never borrow for anything that doesn't make you money. Never let your debt exceed 1 year's gross income. Always keep 18 months of operating expenses in cash and live like you're in a drought, even when the rains are good. To Gerald Pritchard, these sounded like the superstitions of an old immigrant who didn't understand modern finance. To Herman, they were the reason his farm still existed. To understand why that morning mattered, you have to understand what was happening to American agriculture in 1974. Land prices across the Midwest had climbed at a pace that made even seasoned bankers uneasy, though few said it out loud. An acre that sold for around $180 in Nebraska in 1965 was going for nearly $450 by the time Herman filled out that loan application. National farm debt had tripled since 1960, climbing past $70 billion, and the prevailing wisdom was clear. Bigger was better. Credit wasn't a danger. It was a tool. Agricultural colleges preached economies of scale. Extension agents talked about modernization. And banks were more than willing to help farmers leverage what they already owned into something larger. Everyone was chasing the same idea of success. And for a while, it looked like they were right. Herman knew all of this. He heard it every morning at the co-op elevator in Bellwood, where farmers gathered for coffee and talked before heading out to the fields or the shop. He heard it in the laughter when someone mentioned he was still driving that old Chevy pickup from the late 50s, or that he was still running a John Deere 3020 he'd bought used years earlier, while others were trading up to new International harvester machines with turbochargers and more horsepower than Herman thought anyone needed. They said he was cheap. They said he was scared. Some said he was just too stubborn to change. But Herman had watched too many men confuse growth with safety. The tractor he wanted to buy that winter wasn't flashy. The John Deere 4020 had been introduced a decade earlier and had already earned a reputation as one of the most reliable machines ever built. 91 horsepower, 6-cylinder diesel, a tractor that could do the work without asking for attention. The one Herman had his eye on was a 1969 model with about 2,400 hours, owned by a farmer upgrading to something bigger. The asking price was $6,000 to $100. Herman had $6,000 to $100 sitting in his savings account, untouched. In fact, he had more than that. After a decent crop year in 1973, he had just over $14,000 in liquid savings. By any reasonable measure, he could afford the tractor. By Otto's measure, he could afford it because he could buy it twice. But Herman also understood something else, something that had nothing to do with pride and everything to do with flexibility. Interest rates were climbing. The prime rate had jumped sharply over the previous few years, pushed higher by inflation, and the economic aftershocks of an oil embargo that had sent diesel prices soaring almost overnight. Fertilizer costs were climbing. Fuel was no longer cheap. Herman couldn't tell you exactly when the good times would end, but he could feel the strain in the numbers, the way a man feels a change in the weather before the clouds arrive. He didn't want to drain his cash reserves for a machine, even a good one. Cash was margin. Cash was time. Cash was the difference between choosing and being forced. So he told Gerald Pritchard he wanted to borrow $12,000 at 9.75% interest, more than the cost of the tractor itself. Gerald stared at him, genuinely puzzled now. "Herman," he said, "the tractor's only $6,000 to $100. You asking for money for something else too?" Herman shook his head. "Just the tractor. But if I pay cash, I can't afford it twice anymore." Gerald had never heard anything like it. In his world, borrowing was about maximizing opportunity. In Herman's world, borrowing was about preserving options. The interest, Herman believed, was insurance. It bought him the ability to survive whatever came next. Gerald approved the loan. Herman had never been late on a payment in his life. His balance sheet was clean, his deposit steady. If anyone could afford to be backward, it was him. As Herman walked out of the bank that morning, loan papers signed, the town of Bellwood went on exactly as it always had. No one marked the moment. No one guessed it would become a story told decades later. It was just another winter day in farm country. Another decision made quietly by a man who had learned that the loudest confidence often belonged to those standing on the thinnest ice. At the co-op later that week, the talk was the same as always. New land coming up for sale. Bigger planters, more acres under management. Gerald himself had once urged Herman to leverage his equity, to buy the quarter section next door when it came available for $72,000 at 8.5% interest. "You're sitting on $300,000 in equity doing nothing," Gerald had said back then. You could double your operation. Herman had smiled and replied, I already own what I farm. That quarter had gone instead to a young farmer named Dennis Kowalski, 31 years old. College educated, confident in a way Herman recognized but did not envy. Dennis represented everything the future was supposed to look like. Herman represented something older, something most people assumed had already failed. Sitting in his pickup after leaving the co-op, Herman watched the steam rise from the grain elevator against the cold air, and thought of his grandfather, of rules passed down not because they were clever, but because they had been tested by loss. He did not know exactly how the next decade would unfold. He did not know who would still be standing when it was over. He only knew that debt bought more than equipment and land. It bought risk, and risk, once invited in, rarely left quietly. In the years immediately after Herman Dietrich walked out of the First National Bank of Cass County, with that $12,000 loan, the world seemed determined to prove him wrong. If you stood at the co-op elevator in Bellwood in the summer of 1974, coffee steaming in your hand while trucks rumbled past toward the scales, it looked like the future belonged entirely to men who thought bigger, borrowed harder, and moved faster. Corn prices were strong, climbing past $3 a bushel, higher than most anyone could remember. Soybeans followed. Checks came in heavy. New equipment showed up on trailers, paint still shining. Diesel engines idling with a confidence that felt permanent. Dennis Kowalski was right in the middle of it. He had bought that quarter section north of town in 1971 with borrowed money, and by 1974 it already looked like the smartest decision a young farmer could make. His acres were clean, his rows straight, his equipment modern. He drove a newer pickup. He talked easily about interest as a tool, about growth curves, about how you had to spend money to make money now if you wanted to survive later. People listened to him. They nodded. They repeated his words to others as if they were facts. Dennis wasn't reckless, not in his own mind. He was doing exactly what the system rewarded. When he stopped at the co-op, men slapped him on the back and asked what he was buying next. When Herman stopped, the questions were quieter. You still running that old 3020? You ever going to trade that Chevy in? You could afford better, you know. Herman just smiled, the same thin smile that never quite answered the question being asked. He kept farming his 640 acres. He kept his costs low. He put 30 to 40% of his gross income straight into savings, month after month, year after year. He wore the same jacket. He drank the same coffee. And every time someone laughed and said he was missing the boat, Herman thought about boats and storms, and who usually survived when the water got rough. His son Michael felt it differently. Michael was in his mid-20s by then, working alongside his father, strong and capable, watching the world tell him that success looked like expansion. He saw Dennis buy new ground. He saw him order a new International Harvester 1466, 145 horsepower, fully loaded, the kind of machine that made a man feel unstoppable just climbing into the cab. Michael saw the new house Dennis built along the highway, big ranch style, two-car garage, a place everyone could see. At night, after supper, Michael would sometimes sit at the kitchen table with his father and ask the questions he'd been holding all day. Dad, he'd say, everyone's growing. We've got the equity. We could do what Dennis is doing. We could really build something here. Herman would listen. He never shut his son down. He never raised his voice. He would just repeat Otto's rules, one by one, as if saying them again might make them easier to hear. Michael would nod, but the words felt thin against the noise outside. It was hard to believe in drought rules when the bins were full and the checks kept coming. In 1975, Dennis expanded again. Another quarter section came up, and he borrowed nearly $80,000 to buy it. Interest pushing close to 10% now, but still manageable with corn holding strong. He was farming over 800 acres, grossing well north of $150,000 a year. His debt service was heavy, probably $40,000 a year in principal and interest, but it penciled out on paper. The banker said so. The extension agent said so. The equipment dealer said so. Dennis believed it because everyone else did. Herman watched all of this quietly. He made his loan payments on the John Deere for 1020, paid it off early in 1976, and never once regretted the interest he'd paid. The tractor did exactly what it was supposed to do. It never asked for more than maintenance and fuel. It earned its keep, and Herman kept his cash. By the mid-1970s, the pressure on men like Herman grew sharper. The laughter at the co-op shifted into something closer to pity. Poor Herman, they'd say. He's going to wake up one day and realize all the land is gone. He's going to be left behind. Even Gerald Pritchard, who had approved the loan without understanding it, watched the numbers with a mix of curiosity and doubt. The land values kept rising. The loans kept flowing. The system rewarded leverage. And Herman, by every modern measure, looked inefficient. But beneath the surface, small things were changing. Diesel that had cost 35 cents a gallon a few years earlier now hovered well above 50. Fertilizer prices climbed. Interest rates edged upward again. Nothing catastrophic, just enough to make the margins thinner. In 1977, corn slipped from $3 to 50, then lower. Farmers shrugged it off. Corrections happened. Everyone said so. But Herman noticed how quickly confidence turned into calculation. He noticed the way conversations shifted from what to buy next to how to cover operating loans. He noticed how often Dennis found himself in the bank, restructuring, rolling short-term debt forward, confident that next year would fix everything. Dennis was still proud. Pride was part of the deal. To slow down now would mean admitting that the rules might be wrong. And Dennis wasn't ready for that. By 1978, the squeeze tightened. Corn dipped toward to 25. Interest rates on variable loans adjusted upward. Payments grew heavier without anything tangible changing on the farm itself. Dennis came into the co-op less often, or when he did, he stayed quiet. When Gerald suggested leasing out some ground, maybe scaling back just a little, Dennis refused. He took out another loan instead, this one to cover operating expenses. He told himself, and anyone who asked, that farming had always been cyclical. You wrote it out. Herman watched his son watch all of this. He didn't say, "I told you so." He didn't point. He just kept doing what he'd always done, even as it became harder to explain. He lived like the drought was always one season away. He kept 18 months of operating expenses in cash. He refused to borrow for anything that didn't make him money. He let the world think he was small. The thing about this period, the late 1970s, is that it didn't feel like a crisis. It felt like waiting, like standing on the edge of something you couldn't yet see, only sense. For men who had borrowed heavily, every small change mattered. A few cents off the price, a few points on the rate, a breakdown at the wrong time. For men like Herman, those same changes barely registered. His costs were low, his obligations few. He could absorb a bad year without scrambling. And still, the pressure didn't let up. Michael struggled with it most. He believed his father. He trusted him. But he also lived in the same world as everyone else. A world that measured success by acres and equipment and visible growth. It took strength to sit still while everyone around you surged forward. Herman had that strength because he had inherited it, not because he'd invented it. Otto's rules had been born in loss, sharpened by watching neighbors disappear one by one during the Depression. Herman carried them not as theory, but as memory. And memory, unlike optimism, does not fade easily. By the end of the decade, the signs were no longer subtle. Interest rates pushed into double digits. Land values, once assumed to rise forever, stopped climbing. Then they wavered. Farmers who had borrowed at 8 and 9% found themselves paying 11 and 12. Variable loans adjusted without mercy. Cash flow tightened across the county. Conversations at the co-op turned grim. Men stopped laughing. They started calculating out loud, comparing numbers, searching for reassurance in each other's faces. Dennis was still farming hard, still believing the numbers would turn back in his favor. But the confidence that once carried him had begun to crack. He worked longer hours. He slept less. He carried the weight of his decisions in the way his shoulders slumped. When he thought no one was looking, Herman saw it. He recognized it. He had seen that look before, decades earlier, in men who had believed the good times would last. He said nothing. There was nothing to say that would help. The world was about to teach its lesson, the same one it always taught, and it never listened to anyone trying to explain it early. By the time the calendar turned toward the end of the 1970s, the feeling in Butler County had changed in a way that was hard to describe but impossible to miss. If you paid attention, the optimism that had carried men through the early part of the decade didn't disappear all at once. It thinned, it frayed, it turned cautious. Conversations that once started with what someone was buying next now started with what their banker had said that morning. Corn settled into the low $2 range, not a disaster on paper, but no longer generous enough to forgive mistakes. Interest rates kept climbing, quietly at first, then faster. As inflation tightened its grip on everything from fuel to fertilizer to the cost of money itself, for farmers who had built their operations on borrowed dollars, the math began to feel different. Nothing about the land had changed. The soil was the same. The weather, mostly cooperative. The machines still ran, but the margins grew thin enough that every decision carried weight. Dennis Kowalski felt it every time he opened a statement. His operation looked impressive from the road, still clean, still modern, still big enough to make older farmers shake their heads in a mix of envy and disbelief. But inside the numbers, the pressure was constant. Variable rate loans adjusted upward. Payments grew without adding a single acre or a single bushel to his operation. He found himself sitting across from Gerald Pritchard more often, not asking about expansion now, but about restructuring, rolling debt forward, buying time. Gerald listened, the way bankers do, nodding, calculating, suggesting small adjustments that might keep things moving another season. "Lease some ground out," he said once, just to ease the load. Dennis bristled at that. Leasing felt like retreat. Retreat felt like failure. He had built his identity on growth. Slowing down now meant admitting that the rules he had trusted might not protect him. So he borrowed again, this time to cover operating expenses, telling himself that next year would be better, that prices would rebound, that farming had always been cyclical. At the co-op, men stopped talking loudly. They leaned in closer. They compared interest rates the way they once compared yields. Someone would mention a loan resetting from 9 to 11%, and the table would go quiet for a moment before the conversation shifted away. No one wanted to be the first to admit fear. Herman Dietrich listened to all of it without comment. He was still farming the same 640 acres. He was still running his equipment until it needed to be replaced, not until something shinier appeared. He still wore the same jacket, still drove the same pickup, still put money into savings even when others questioned why anyone would sit on cash. When there was land to be had, too many, his behavior now looked less foolish and more stubborn. But stubbornness was still not admired. It was tolerated, at best. Michael felt the tension more sharply than his father. He was old enough now to understand the numbers, to see the strain in neighbors' faces, to hear the frustration in their voices. He had friends his own age who were carrying enormous debt loads, men who worked themselves to exhaustion just to stay even. Sometimes, late at night, Michael would run the numbers himself, imagining what it would look like if they had expanded when everyone said they should have. He would picture more land, bigger equipment, higher payments, and then he would picture a bad year layered on top of that, a breakdown, a drop in price, an interest adjustment at the wrong moment. The picture always ended the same way. He would close the notebook and sit quietly, understanding something his father had known for years, but never tried to explain in words. Herman didn't talk much about risk. He lived it instead, shaping his life around the idea that the future was uncertain and that pretending otherwise was dangerous. He had 18 months of operating expenses set aside, just as Otto had insisted. He had no debt beyond what made him money, and even that he treated cautiously. When fuel prices jumped again, he paid them. When fertilizer costs rose, he adjusted. He didn't scramble. He didn't panic. His operation bent where others strained. By 1979, the sense of waiting grew heavier. Interest rates pushed higher still. Agricultural lending rates crept into the low teens. Land prices, which had seemed unstoppable, stalled. Then they hesitated. Farmers who had borrowed against inflated values began to realize that equity was not the same as cash. and that paper wealth could evaporate quickly if the market turned. Dennis felt it acutely. His debt service consumed more of his income each year. He cut where he could, but there was only so much to cut when your operation was built for expansion. He worked harder, longer, pushing himself as if effort alone could hold the structure together. Pride kept him moving forward even as the ground beneath him softened. Herman watched from a distance, not out of judgment, but out of recognition. He had seen this pattern before, not in the details, but in the shape of it. In the late 1930s, as a boy, he had watched men who were just as confident lose farms that had been in their families for generations. He had watched auctions where neighbors stood with their hats in their hands, bidding on equipment they once borrowed from each other. Those memories never left him. They informed every quiet decision he made, every opportunity he declined. The late 70s were not dramatic in the way history books make them seem. There was no single moment when everything collapsed. There were only adjustments, recalculations, small concessions made in the hope that they would be temporary. That was what made it so dangerous. It allowed men to believe they were still in control, that one more loan, one more year, one more good harvest would set things right. Herman understood that waiting could be a strategy or a trap, depending on what you were waiting for. He waited with cash, with low costs, with flexibility. Others waited with debt, with obligations that did not pause just because prices fell. At the co-op one afternoon, as winter approached again, someone mentioned that rates might go higher yet, that the prime was climbing fast in the cities. The table went quiet. Outside, the wind cut across the empty lot, carrying dust and the smell of grain. Herman finished his coffee, pulled on his jacket, and headed back to his pickup. He didn't know when the breaking point would come. He didn't know how many would be caught in it. He only knew that the space between confidence and collapse was narrowing, and that once it closed, there would be no room left to maneuver for those who had already spent it all. By 1980, the waiting was over. What followed did not arrive with a single blow, but when it came everywhere at once. And it came without apology. Interest rates surged past levels most farmers had never imagined they would see again. The prime rate climbed into the mid-teens, and agricultural loans followed close behind, pushing 16, 17, even 18% in some cases. For men carrying variable rate debt, the ground seemed to fall away beneath their feet. Payments doubled without warning. What had once been manageable suddenly became impossible. Corn prices slipped below $2 a bushel. Export markets dried up after the grain embargo against the Soviet Union. Land values, which had climbed so high they felt untouchable, peaked and then began to fall. Not slowly, not gently. Acres that had sold for $900 at the height of the boom slid back toward $400, sometimes less, leaving borrowers owing more than their ground was worth. The crisis did not feel like a storm. It felt like suffocation. Across Butler County, farmers came into the bank with hats in their hands and numbers that no longer worked. Gerald Pritchard watched the shift from the other side of his desk, his confidence shaken by how quickly certainty had vanished. Loans that once looked prudent turned toxic almost overnight. Equity evaporated. Cash flow collapsed. Men who had built their operations carefully on borrowed money found themselves trapped, unable to sell without locking in losses, unable to borrow without sinking deeper. Dennis Kowalski was one of them. By 1981, his payments consumed nearly everything his farm produced. Each month required another decision, another compromise, another conversation that left him staring at the floor instead of meeting Gerald's eyes. He tried to hold on. He sold what he could without dismantling the operation entirely. He delayed maintenance. He worked himself harder than ever, believing that effort might somehow compensate for math. It didn't. In 1982, the notices began to arrive. Restructuring turned into forbearance. Forbearance turned into deadlines. Dennis watched neighbors fall first, men he had admired, men he had competed with, men whose confidence had once matched his own. Auctions became common. Equipment lined up in rows, paint dulled by dust and use, sold for fractions of what it had cost new. Families packed up quietly, leaving houses that had been built only a few years earlier. The co-op grew silent. Suicide crept into conversations in the way people speak about things they are afraid to name. Dennis lasted longer than some. Pride kept him standing when others sat down. But pride could not stop the bank. In 1983, the foreclosure came. Both quarter sections were taken. The equipment followed. The house by the highway, the one meant to show the world he had made it, was gone. Dennis moved to Omaha to take a job at a meatpacking plant. 43 years old and starting over with nothing but what he could carry. He was not unique. Across Nebraska and the wider Midwest, tens of thousands of farms failed. Communities hollowed out. Churches emptied. Schools closed. What historians would later call the farm crisis of the 1980s did not feel like history. To those living through it, it felt personal. It felt like betrayal. Herman Dietrich watched all of this from his fields outside Bellwood. He did not celebrate. He did not speak loudly about having been right. He worked. When corn dropped below $2, his operation still covered its costs. When rates soared, he had no variable loans adjusting upward. When neighbors scrambled, he wrote checks from money that had been set aside for exactly this moment. His 18 months of operating expenses sat quietly in the bank, untouched until needed. In 1982, when the quarter section south of his land went to auction, Herman attended without fanfare. He stood near the back, listening as bids stalled far below what the land had once commanded. When the hammer fell at $28,000 for 160 acres, that had sold for $72,000 just 11 years earlier, Herman paid cash. He didn't smile. He didn't boast. He simply expanded his farm in a way that would have been impossible during the boom years. By 1985, as the worst of the crisis eased, Herman was farming 960 acres, all owned outright. He had more money in the bank than he ever had before. He was 63 years old, tired in the way men get tired when they have carried responsibility for decades, but positioned better than he had ever been. Michael watched the transformation quietly. He had seen neighbors lose everything. He had seen friends' parents leave town in the middle of the night. He had seen what debt did when the world turned against it. The lessons his father had repeated for years no longer sounded old-fashioned. They sounded precise. Herman never framed his survival as a victory. He spoke of it as endurance. He knew that what had saved him was not intelligence or luck, but discipline, patience, and the willingness to look foolish for years so that he could remain standing. When the noise stopped, he knew that the cost of that endurance was visible all around him. In empty farmhouses and broken communities, the crisis had passed him by, but it had not passed without leaving marks. When the worst of it finally loosened its grip in the mid-1980s, there were no parades in Butler County, no speeches about survival, no sense of victory the way people imagine it in hindsight. There was only what remained: empty houses, fewer trucks at the co-op, land that had changed hands quietly, sometimes bitterly, often without goodbyes. Herman Dietrich kept farming, the same way he always had, rising before dawn, checking the weather, walking his fields, fixing what needed fixing, and leaving the rest alone. By 1985, he was working 960 acres, all of it owned free and clear, ground he had accumulated not by chasing growth, but by waiting for moments when patience mattered more than ambition. He had more than $70,000 in the bank, a number that would have seemed impossible to him as a young man, not because he wanted wealth, but because he had never believed in assuming good times would last. Michael stood beside him through those years, no longer questioning the rules, no longer wishing they had expanded when others did. He had watched neighbors lose farms that had been in their families for generations. He had watched strong men break under the weight of numbers that refused to bend. The lesson had arrived the only way lessons like that ever arrive, not through explanation, but through loss. Herman didn't talk about Dennis Kowalski often. When he did, it was without judgment. Farming, he would say, has a way of teaching you whether you listen or not. Dennis had trusted the system. Herman had trusted memory. Neither choice felt radical at the time. One simply proved more durable when the future stopped cooperating. Herman continued farming into the 1990s, still wearing the same kind of clothes, still driving his trucks until they had 100,000 miles on them, still attending church at St. Peter's Lutheran in Bellwood on Sundays, still drinking coffee at the co-op when there were fewer people left to drink it with. He died in 1997 at 85 years old, leaving behind a farm that carried no debt, a balance sheet clean enough to pass to the next generation without the crushing estate problems that destroyed so many families. Michael inherited more than land. He inherited a way of thinking that had already been tested and proven. When Jacob, Michael's son, took over the operation in 2003, he stepped into a farm that was larger than the one Herman had started with, but built on the same foundation. The world had changed again by then. Equipment was bigger. Costs were higher. New combines cost more than entire farms once had. During the ethanol boom of the mid-2000s, land prices in Butler County surged again, climbing past $2,000 an acre. Once more, the pressure returned. Expand or be left behind. Jacob felt it just as his father once had. He had the equity. He had the opportunity. And he said no. He bought good used equipment instead of new. He refused to buy land at inflated prices, even when neighbors questioned his caution. When the financial crisis of 2008 hit and commodity prices fell, Jacob's operation barely felt it. His costs were low, his cash reserves deep. He did not scramble. He did not panic. He waited. The rules held again. The old John Deere 4020 Herman bought back in 1974 still sits on the Dietrich farm. It doesn't see much work now. Mostly it moves equipment around the yard or handles small jobs that don't justify newer machines. Jacob won't sell it. It's a reminder, not of success, but of restraint, of a moment when a man chose to look foolish so he could remain free. Jacob's son, named Otto after his great-great-grandfather, is 15 now. He works on the farm after school, learning the same rhythms, hearing the same rules repeated not as slogans, but as facts. If you can't buy it twice, you can't afford it once. Never borrow for anything that doesn't make you money. Never let your debt exceed 1 year's gross income. Always keep 18 months of operating expenses in cash. Live like you're in a drought, even during the good years. These rules saved the Dietrich farm 3 times. Once in the 1930s when Otto held on by refusing to gamble. Once in the 1980s when Herman's discipline meant survival. And once again in 2008 when Jacob's restraint allowed him to stand steady while others stumbled. Gerald Pritchard retired in the early 1990s, long after the loans he once believed in had undone so many families. At a Farm Bureau meeting before he left town, he told the story of Herman asking for a loan to buy a tractor he could have paid cash for. He admitted he had thought the old farmer was backward, maybe even senile. But Herman understood something the rest of them hadn't. Gerald said, "Debt doesn't just buy assets. It buys risk. And risk, when mispriced, destroys more than balance sheets. It destroys communities." Today, the pressures facing farmers look different on the surface, but familiar underneath. Equipment costs have exploded. Land prices in some parts of the Midwest have climbed past $10,000 an acre. Credit is easy again. Growth is celebrated again. The same voices are saying the same things in different words. Get bigger. Move faster. Don't get left behind. The story of Herman Dietrich is not about rejecting progress. It's about understanding limits. It's about measuring success not by how much you control, but by how much you can survive. Herman never became famous. He never wrote a book. He never gave speeches about finance. He just farmed his land, raised his son, and passed on a set of rules forged in loss and proven by time. He understood that the best fertilizer for a farm, for a business, for a life, is liquidity, and that you cannot have liquidity if you spend everything chasing what everyone else has. That is what saved 3 generations. Not luck, not government programs, not brilliance, discipline, patience, and the strength to say no when the world insists you should say yes.